Welcome to a presentation on cash flow statement. What do we understand by cash flow? Cash flow refers to the inflow and outflow of cash. And when we refer to cash, we refer to cash in hand, cash at bank, and cash equivalent. And cash equivalent are anything that can be easily converted into cash, which could include short term investments. So, cash flow statement is a statement of recording all the inflows and outflows of cash. What are the uses of this cash flow statement? By preparing cash flow statement, we can evaluate the current cash position and we can also understand what would be the future cash position of the company, with the help of which financial plan can be taken place. We can also understand what is the short-term financial position of the company, the liquidity position of the company, and also you could understand the reasons why the company has a poor cash position. The difference between fund flow statement and cash flow statement are, when we refer to fund, we refer to working capital. It's more a wider concept, whereas cash flow is a narrow concept considering only the concept of cash. And in fund flow, we have accrual basis of accounting, whereas cash flow has only cash basis of accounting. And in fund flow, we prepare a statement called as schedule of changes in working capital, which shows the changes in the current assets and the current liabilities. No such statements are prepared in cash flow statement. And fund flow is useful for planning long-term financing plans, whereas cash flow is for short-term financial plans. And in case of fund flow, the opening and the closing of cash are shown in the schedule of changes in working capital, as cash is treated as a current asset, whereas in cash flow statement, the balances are shown as equivalent at the beginning and the end of the period in cash flow statement. And in cash flow statement, the transactions are classified into three activities, namely operating activities, investing activities, and financing activities. Operating activities are the principal revenue producing activities of the company. Investing activities refers to the acquisition and disposal of the long-term assets. Okay, the purchase of assets, the sale of the assets is considered here, and financing activity is the result of changes in the owner's capital. So it's more to do with the long-term borrowings, that is issue of shares, redemptions of shares or debentures, etc. So this is a brief introduction about cash flow statement.